All right. So the 5-point buyer plan of action. The first step is PreQual. PreQual is how much cash do they have and where do they want their monthly payments. By cash, we mean down payment, closing costs, inspections, appraisal, and repairs. Out-of-pocket costs. The least out-of-pocket would be the best loan program, and working with the best title company to lower the closing costs. The lowest monthly payment is the most aggressive interest rate. And since lenders get paid on the front end and the back end, when the front end you see, it's part of your closing costs. The back end is the interest rate. If we can create a competition, then the buyer wins. If the buyer can lower their out-of-pocket costs, they might be able to put more to be aggressive in their offer. If a buyer has a lower interest rate, then they have a higher purchase ability to go up in price range to keep the same payment. Now, if somebody has cash, they're not borrowing money. PreQual is the least out of pocket and the lowest monthly payment. By payment with a cash buyer, we're referring to interest. I'm sorry. By cash with a cash buyer payment, we're talking about taxes and insurance and HOA. So if you say, all right, so I'm guessing that you want the best deal. And by the best deal, we mean the least out of pocket and the lowest monthly payment. Oh no, I'm cash. I don't care about a payment. And that's fair. And I'm guessing you want to get the best insurance, the lowest insurance, and the lowest HOA. So when you talk about taxes, insurance, and HOA, where were you hoping to keep that on an annual basis? All right, so again, what I hear you saying is you're looking to buy a $250,000 property. You're looking to keep your payments at around $1,500, and you have about $7,000 or $8,000 for down payment, closing costs, inspections, appraisal, and any repairs that might be done to the property.
Yes, correct.
Perfect. Thank you for answering that. Just curious, how long would it take you to save another $8,000?
Maybe another 4 or 5 months.
Another 4 or 5 months. Awesome. Here's why I'm asking. Because with a down payment in a government loan, it would be 3.5%. That would be about $8,800. Now that doesn't include inspections, that doesn't include appraisal, that doesn't include your closing costs. So in today's market, you would be asking the seller for concessions, which means the seller helping pay your closing costs. However, the temperature of this market, that isn't very realistic. Have you heard that yet?
Yeah, I've heard that the market is kind of crazy.
Yeah, and in regard to finding the right home and then getting pre-qualified, that's what most home buyers look to do. And may I share why that may not be the best idea?
Yeah, sure.
Thank you. Because here you are spending time finding the right home, then starting the process of getting qualified. Now, what if you fell in love with a home to find out it costs an extra $10,000 and an extra $600 a month that you feel comfortable. That would be upsetting, right?
Yeah.
Yeah, and what professionals like me, what we like to do is find out specifically how much cash you feel comfortable investing, where you feel comfortable per month in a payment, and then diving into the market to find the best homes with transparency and discussing the pros and cons of each of those homes. Do you see value and transparency in the market?
Yeah, for sure.
Absolutely. So let's do the right thing. Let's get you in touch with a mortgage professional so that we can find out specifically what program we have to dive in on to start this home search the right way. Fair enough?
Mm-hmm.